I mean, this is getting really ugly and really scary for the overall economy. And this is something I keep speaking about day after day. Even yesterday I talked about it. You know, we got to watch what's going on here because this is starting to get to a little scary levels. Okay, so Foot Locker just reported their earnings. Right, total sales decreased 9.9%. Comp store sales decreased 9.4%. EPS loss of 5 cents. Non-GAAP EPS gain of 4 cents. Now the company's going through a bunch of restructuring right now, so in terms of their profitability being messed up over this next few quarters, that doesn't really come as a surprise to us. It's a little more of the guidance and a move they made and also total sales. Lowering 2023 sales and earnings guidance, that's never a good thing to see. Pausing the dividend to enhance flexibility, oh boy. Now, what do I think about pausing the dividend? They're going to stop paying the dividend, and this is a dividend-paying stock. What I think about that is a disaster, a complete disaster. Like, the main reason people buy Foot Locker stock is for that dividend. I own the stock for the dividend. You don't see me owning that stock in my public account. I own it in my dividend portfolio. So when all of a sudden you're going to stop paying the dividend, that's devastating, right? That's absolutely the worst thing that can happen to you as a dividend investor. With that being said, when we're going to go through some of their numbers here in just a moment, you can understand why they're pausing the dividend because things are a little scary. Let's just call it that, okay? Mary Dillon, the new president and chief executive officer of the company, she says, our second quarter was broadly in line with our expectations, despite the still tough consumer backdrop. However, we did see a softening in trends in July and are adjusting our 2023 outlook to allow us to better compete for price-sensitive consumers while still leaning into the strategic investments to drive our lace-up plan. Importantly, we are continuing to make progress with our inventory levels. I don't know about that. And look to best position the business in upcoming holiday season and into 2024. Now, if Foot Locker's doing bad, that means Nike's doing bad. That means the rest of the folks that sell shoes are doing bad. So you're likely going to see Nike stock down big today, Adidas, Puma, any of those companies, and also doesn't bode well for a lot of the privately owned shoe companies as well. Look at this financial outlook. I mean, this is just bad. And remember, they just recently took down all their numbers, and so they're taking them down even more this quarter. This is a disaster, folks. Sales now are expected to come in even worse than they already thought they were going to come in, right? Comp store sales are expected to be down way more than they had initially anticipated, right? Licensing revenue is expected to be worse. Gross margins expect to be worse, which means they're going to be doing more aggressive markdowns. So if you need a new pair of shoes, yeah, you might get some deals over the next few quarters here, okay? Everything's just bad. I mean, it's just bad, right? Non-GAAP EPS, $1.30 to $1.50 expected. They were expecting $2 to $2.25. Now, if we go back just a few quarters ago, the company and folks in general were expecting $3 plus for this year. $3 plus. And now we're all the way down to $1.30 to $1.50 expected. This is awful. There's no other way of putting it, but just plain awful. Awful, okay? Now, if we look a little bit deeper here, total revenues are down quite a bit on a year-over-year basis, $1.8 billion from over $2 billion there. Cost of sales hasn't decreased as much, which means your income from operations is going to get wrecked, which is exactly what happened. They have $1 million of operating income from operations versus $142 million in the same quarter last year. Net income came in at a loss versus obviously a gain of $94 million in the same quarter last year. That's not good, not good. If we look at the balance sheet, this is where things get very worrisome, okay? Look at this. Cash and cash equivalents, $180 million. That's versus $386 in the same quarter last year, right? Merchandise inventories are still a big issue. You got over $1.8 billion in merchandise inventories. That's versus $1.6 billion in the same quarter last year. That means markdowns are coming. That's just bottom line. When you see inventories that high, they're going to have to discount. They're going to discount, and they're going to discount, and they're going to discount. And that's going to mean lower margins, lower profitability, all those sorts of things, right? And sometimes that can steal sales away from higher-end products, okay? So, what's my opinion, perspective, and then we'll talk about Bath & Body Works, and then we'll talk about what this means for the overall economy. In just a moment, from all these retailers that just continue to just absolutely crash and just report these horrible numbers, okay? So, in my opinion, in regards to Foot Locker, is a stock a buy, a sell, or a hold right now? From my perspective, as hard as it is for me to say this, it's hard to say it's a buy right now. If you're buying for only two reasons and two reasons only. You're buying because of Mary Dillon, the woman I just showed you, who's a very proven executive, who's been in the workforce for a long time and has an incredible track record of success. Or you're buying because of kind of like a blind faith that the economy is going to get better from here, that the consumer is going to get better, and that all these retailers' sales will pick up, either at the end of this year or into next year, right? So it's a tough position, man, because as much as I want to be out there buying the stock today, I actually can't buy the stock today. And that hurts me, because when I see a stock go down like this, I want to just, my natural thought process is buy. Like, it's down huge, buy the dip, right? But damn, I don't have much positive to go off of from this report. They just slashed their dividend to nothing. They just lowered every single number in the book. Their inventories are way too dang high. And so I'm looking out there, and this is all during a time period of 3% unemployment. That's the scary part. I'm like, what happens if unemployment was 5%, 7%, 9%, 10%? What does that mean for Foot Locker? That's a scary freaking thing for me. And so I'm going to reassess. I'm going to listen to that conference call. I haven't even listened to a conference call yet. I'll listen to that, go through it, and try to figure out, is this one I want to buy the dip on, or is this one I just want to stay away from for right now? And so it's a tough position. It's a really, really tough position. Somebody knew the Nvidia numbers. I think a lot of people knew Nvidia numbers, just to be quite frank. You notice how much big tech stocks were pumping into these earnings, right? Look at today, for instance. We were up $12,000 in Meta, $6,000 plus on Tesla here today, $1,300 on Amazon. I could throw that in the bunch, right? Even PayPal was up. Even PayPal? How good things had to be for PayPal stock to go up? Holy smokes, man, the stock never goes up. Palantir stock was up nearly $3,500 going into today. Skyworks obviously was up. People knew the numbers. I'm not going to, mess around when it comes to that. People knew these numbers going in. These, it was a complete movement up into big tech going into these earnings, and Nvidia stock kept moving up. It was pretty much like somebody knew the numbers. People knew the numbers, okay? Bottom line in regards to this. Now, if you want to look at after hours is moving a lot of these stocks. So get ready to make some flip and flapjack and money here, okay? Amazon's up nicely after hours, up nearly $2 a share in after hours trading. Tesla's up nearly 2%. I don't know, who do you think is placing all these orders for Nvidia? It's companies like Amazon, Tesla, and others. So if anything, I don't know, this is going to hurt these companies' profitability in the short term at least, right? But Tesla's moving up after hours. Meta's moving up very nicely after hours. Another company that's probably placing a ton of these orders, because people are like, who's buying all these chips, okay? Who's buying all these chips? Every pretty much big tech company in the world is buying all these Nvidia chips right now. But yeah, Meta's up very nicely after hours. Palantir making a very nice upward move after hours. Over 4% mover here in regards to good old PLTR. AMD, who's getting their lunch eaten by Nvidia right now. AMD's just a joke compared to Nvidia right now. It's not even close, right? AMD's numbers are laughable. Look at their last quarter they just reported last month, and then look at Nvidia's numbers, and you're like, oh my gosh, AMD's got some catching up to do, right? But, even a stock like that's pulling up very nice after hours, which just shows you we just got the boogeyman out of the market. The boogeyman was Nvidia comes through with crap numbers and it drops the whole market. It drops all these tech stocks. And Nvidia just came through, saved the whole show, put this whole market on its back and said, I got y'all, okay? And that just took the biggest boogeyman out of this market. So it doesn't really matter what you do, what your business is, all big tech's moving up. Even if you're getting your lunch eaten. Even if you're the one that's spending a fortune on all these chips right now. It doesn't matter. You're just going up right now, okay? That's what's going on as far as that goes. Even Snowflake reported after hours. Right off the bat, when they reported, stock went down, down, down. Then Nvidia comes in through with their numbers, stock starts spiking, and guess what? Snowflake right away spikes huge right after Nvidia's reports, which goes to show you how much Nvidia earnings ultimately mattered for this entire market. Everybody looked at Snowflake's numbers like, we're selling the stock. Nvidia's numbers come out and everybody's like, buy Snowflake. Like, it's literally in a matter of minutes is how fast it played out there, which goes to show you it's more than just humans. It's algorithms, right? It's, all this automated trading that goes on nowadays where it's like if Nvidia comes in, beats and comes through with this number, we're automatically buying this sort of stock. And there's arbitrage in that, right? Because, I mean, you could get in a Snowflake at 152, 153, 154, and after hours is 160 plus, and you can dump out of it. When some of these trades are going through, they're done with millions of dollars, tens of millions of dollars, or sometimes hundreds of millions of dollars. You're talking about some pretty big profits in a matter of minutes. It's not like that took hours to make that money. It's a matter of minutes. It took to make just insane amounts of profits. So that's what happens, okay?